Well, we've arrived at the end of this session, and it's showtime. So we're going to have our own version of happy hour right now, and we're mainly going to have fun. And I have had a lot of fun getting to know my three guests today. And part of the fun revolves around that they're in an industry and industries that I really didn't know existed in their full form. And much of the discussion today is going to revolve around a whole artistic area that we haven't talked much about. We've talked about everything from stand-up comedians to movie production and turning out big hits and all of the disc jockeys and all the wonderful ways that it's been the big bang of culture here that is so obvious to anyone who just drives around this city. And the quality of the architecture and the landscaping is so stunning. But we're going to talk today about the art finance business, fine paintings, new artists, actually trading in art. And we're also going to talk about a new movie business, which involves debt financing in this part of the world that really there's very little of right now. So I wanted to open it up by talking to Xavier about a business that he has really created in the art field, which is fractional ownership of paintings that really is almost like a trading business. It's really reminiscent of the kind of things I cover in New York, talking about Wall Street, and it's a business I didn't even know existed. It's apparently very successful, but Xavier really, as I understand it, was a pioneer in this business. Can you tell us about that business and how it works?
Well, I'm going to go back to 1989, when the Japanese were buying art all over the world and paying a lot of money for it. I had just graduated college, and that was when Saito bought the famous painting by Van Gogh. Both the portrait of Dr. Gadgets and the sunflowers. And I said, well, this has got to be a tremendous business, because assets are, the paintings are going up in value, and whether, they obviously have a very important emotional component, and that emotional component is measured by the importance of certain artworks that are supranational, and they build identity and they're recognizable by everybody, but at the same time, they've been going up in value. There's never been a time where Leonardo has been worth zero, but TWA was worth zero, Emron was worth zero. So I said, as far as we are buying great quality and the greatest artists that have a track record, we can do fractional ownership based on real tangible ownership. I mean, real ownership directly on the asset through blockchain technology. So we partner at the end of 2020 and 2021 with Swiss Bank, and we continue doing it for accredited investors, but now we also do it for individual investors as well. And we had experience because we had previously managed our investment fund. That was the Artimundi Global Fund, which I think has been the most successful art fund recorded to date, where we had an IRR of 17.1% after the 5 years duration of the fund. And ever since that fund managed about 220 million or so. And ever since then, we have managed about $1 billion over $1 billion in assets ever since. Yes.
Yeah, and it's really like a trading business that you get in and you get out very rapidly. Can you talk about that aspect of it and how you're able to get in at enough of a discount to really make it work?
Well, in the way we do it is we always have skin in the game, so therefore you can imagine how strong our countermeasures are to avoid risk.
Right.
So once we buy these artworks and we go through the fractionalization process, the digital, creating actually the digital shares or the tokens, then we just offer it usually on a private platform. It's not open to everybody. You need to be a client of the private bank but now we can do it to regular investors as well. So sometimes some of these assets are owned by 3,000 people, 4,000 investors, right? It's not something that you have a quick turnover and you don't sell it at a discount. You do through, appraisals like Gert Jones, And other companies, you do a thorough valuation and you create a base value. And then the par value of every share matches that face value.
Right. Yeah.
And it's not sold at a discount, but it's being held over a period of time.
Yeah, but you're trying to buy in at a discount.
Well, we need to buy it at a discount, yes, because
yeah.
we always put these paintings into the market. We only buy from the private sector, and we put the paintings back in the market when we think is the right time. But generally speaking, we set the investment horizon to about 4 or 5, 6 years, 3, depending.
Yeah.
These masterpieces work better when the investment horizon is longer, but some investors don't have the patience.
Right. And Stefan, you're in the conservative part of the business. You lend large sums, $1 million to $35 million, against, I believe, for wealthy families and other big-time art owners. Can you talk about your financing business and how it's developing?
Indeed. I'm afraid not happy hour. We're at the very conservative end of, I guess, the brutally commercial side of things. There's been a huge growth over the last certainly 5 years, probably even 10 years, in the availability of leverage, borrowing money against art collections. Historically, it was the preserve of the private banking market. If you were a large family or institution with a collection, you've been able to access liquidity from that collection for many, many years. The private markets, the alternative lending market that we're in, alongside the large auction houses, is really a much newer thing. And there are a whole series of boring R's do with it. There's rigor, there's risk. So as regards this part of the world, it's a very, very new industry, and I think probably the strongest driver or brake to development of it is regulatory. So at the end of the day, if you can't be confident in lending, no investor will take the risk. So sort of regulatory is the first.
Yes, and do you see the necessity for regulation changes here in Saudi Arabia or in the Middle East to open up this market? Or I think you said you're already able to lend to Saudi and other Middle Eastern owners.
There are two or three different aspects of it. I mean, the most important is the legal framework of loan documentation, and I mean that, as I think my fellow panelist at the end there has established as well, is viable. Then there's a question of possessory and non-possessory. I mean, one of the fascinating parts about our part of the art financing industry is that we allow collectors or galleries to keep the artwork and don't have to take possession of it ourselves. And the legal framework around non-possessory loans of movable assets is quite complex.
Yeah. And Gilles, let's talk about your opera galleries, which are all over the world. You're a gypsy, as you said. You're between Singapore, Paris, New York, where you have, 17 galleries. Can you tell us how the business developed? And then also, I want to talk to all of you about this, is given the tremendous big bang in culture we've seen right here in Saudi Arabia, whether how much more willing you may be to come to Saudi or the Middle East and the kind of business opportunities that you see here, given this tremendous change that we just had. I was here 12 years ago, you wouldn't even recognize the city, given the explosion in especially in culture and architecture.
Yeah, so thank you very much. So I created Opera Gallery 30 years ago. The first gallery was in Singapore. We have right now 17 galleries around the world. We are in Asia, America, Europe, and Middle East. We have a few galleries in the Middle East, but Middle East is actually the region, where we want to develop the company. We're opening another gallery in Houston in a few months, but after the focus will be in the Middle East. On the side of the galleries, I was used to manage art funds regulated in Luxembourg by the CSSF and audited, one by Deloitte, one by BDO. So the art fund allowed me, I was raising money with this art fund to be able to feed my galleries with masterpieces. The funds we manage, we did not 17%, but we did the first one, we did 11% after 7 years lifetime, and the second one 14.5% net to the investors, which is not too bad. And I created a company 1.5 years ago with a company where knowledge investors could put money in exchangeable bonds linked to masterpieces, only 65 artists, and the money they put as a capital guarantee at 100%.
Right.
By the third,
Is this equity? It's all equity.
it's equity.
It's all equity.
By
All
the-
ownership shares.
Yeah, ownership shares. And it is guaranteed by the third biggest insurance company in the world. I opened my own insurance company,
Yeah.
but this insurance company is reinsured by Arch.
Yeah.
So we can show to the investors track records, linked to art fund that I manage since 2007, from 10.88 to a little bit less than 15% net to investors. This performance of art fund was linked uniquely on Opera Gallery network.
Yeah.
And the new company I opened, I raised money from investors, and we have 7 galleries with me. So we have altogether a network of 43 galleries to sell the work. So this new company, the goal is to buy and to sell very fast. We started 1 year ago. We sold 80% of the painting we bought with the average performance.
In what period?
We started the company in March.
Yeah.
We raised the money in April. We started to buy in September, to pay the painting in September, sorry, and until March, on the 15 first painting we bought, we sold 10 with annual IRR of 67%, because the goal is to buy and to sell fast. And we give, as soon as we sell, we give back the money to the investors. It's not like a fund where we need to wait, sometime 2 years, 3 years, 4 years. We pay as soon as we sell.
Yes. This is very different from the private equity business where you invest a lot of money in a big pool and you wait about 8 or 10 years to get your money out.
It's a bit different.
It's very different. It's a business, we're talking about paintings that could be decades or centuries old, but the turnover here is a lot higher than it is in the PE business and around the world. So Phil, let's talk about your business, which is very different, but as you expressed to me, we were speaking earlier, it's the debt financing part of the movie business is very well developed in Europe and the US, but not at all in the Middle East, as you were saying. And I think, what do you see the future, or where the big growth areas are? But it sounds like Saudi Arabia may be potentially one of them, given the ambitions that we've heard at the conference.
Absolutely, 100% it is. And yeah, it's relatively developed. It is established in Europe and North America, but it's still relatively niche, similar to art lending and financing. There's probably 10 to 20 companies, of which we are one, but there's a huge amount of deal flow and pipeline, given, the maturity of those markets. But yeah, having spent a lot of time in the Middle East and also Asia in the last few years, with a particular streaming platform we were investors in, what I saw was this proliferation of tax credits and rebates being released by various governments, and Saudi being one of those, to encourage international production and also to stimulate local production in the entertainment sector, in film and TV. But what I couldn't understand or couldn't see was who was lending against these tax credits, because they're only payable once you've finished your production, you've submitted your accounts, and you've ticked off all the necessary things required by the Film and TV Commission. So that's when we were going to have many conversations across the whole of the Middle East and across the whole of Asia with all of these countries that were releasing these incentives. And what we found was actually no one is lending against them, nobody at all. And the only way producers are facilitating them into their finance plans and their production financing is that they are allocating them to an equity investor when they come back. So it's a very inefficient way of using those incentives.
Yeah, so really the entire industry was financed with equity.
Exactly. I mean, this is what we found is across the whole of the regions, and in fact, anywhere outside of Europe and North America, equity is the driver of the entertainment financing ecosystem, which is a very inefficient and a very risky way to be doing this.
Yes, because you think of the rest of the world, what it's probably, 30% equity, whatever the number is, but the volume of production must be very restricted by the
exactly, and bringing in debt helps not only give it that shot in the arm in terms of being able to increase production, because the equity investor puts in less, they're taking less risk, the broadcasters don't have to put in as much to commission, the producer holds on to more of their IP and control in the project, and also, the key bit here and what we think is exciting is creating the rails and the institutional structured approach to investing into the creative sector through what we do, saying we can provide the rails, we can provide the collateralized approach to financing with a regular return across a huge pipeline of potential projects. So you can scratch that itch of supporting the creative sector and getting involved with filmmakers and TV producers, etc. But you can also do it in a safe and secure manner, which generates a regular return for you.
Yeah. And are you seeing changes in the regulations, or rather in the practices of the government credits we were talking about that would allow more debt financing, or has it not happened yet?
It's happening. We're in direct conversations with most of those film and TV commissions and creative ministries, and that's what I think is the real another exciting thing or valuable thing for us, is we're able to have those very direct discussions at the stage of evolution that the industry's at in these regions.
Yeah. So I wanted to ask the art group. All of you are in this market in an institutionalized fashion, and you've gotten to a certain size. I'm sure you've achieved certain economies of scale getting to that size, but you can get too big too in an industry like this, where you have to be very specific about what you're buying and very careful about the expertise that goes into the kind of financings that you do and the kind of paintings that you back, et cetera, and the rarefied group of investors that you may have. So can you talk, each of you, a little bit about how scale works and what kind of the ideal scale is? Javier, starting with you.
I think scale has been a successful factor.
For you, yeah.
Yes, as you said, as you rightly pointed, the ability to kind of create an ecosystem of how to treat the artwork from the logistics side, insurance, managing, cataloging, curatorial expertise, appraising, all sorts of different valuations and different methods. Assuring ownership, clear title, authenticity, obviously, but that's an easy one. Then, of course, things like condition. All of that, you create a team. And I've always thought that this team had to be well-trained. So basically, I hire everybody that works in different departments. They all have common knowledge in art. So they have degrees in art, or master's degree in art, or even doctorate degrees. And so they can do logistics, but at the same time, they can be part of a committee that reviews the artworks. And then we also have a non-profit foundation, because what we do is all for profit, right? And Picasso's and the like, always dead artists. But what we do in the foundation is we're building a museum, and we are sponsoring emerging artists, contemporary artists. But all of that is a philanthropic thing. But a lot of the people in the team that work in the for-profit group, they also work in the non-profit thing, and we do residences, exhibitions, and
And Stefan, how in your business? It takes so much expertise, and it's a business where you have scholars working alongside business people. Of course, that's true to a certain extent in all of these culturally rich industries, but go ahead and talk about what kind of the ideal scale is, and and how you've grown and how big you want to get.
Yeah, I mean, our broader group, John's, appraises about $15 billion worth of art a year. Comparatively speaking, our financing business is tiny. I think in the last year, probably about $100 million of financing. But the core discipline of the appraisal is the valuation, what is something worth, and by what measure is it, what's it worth in a gallery, what's it worth at auction, what's it worth if you have to get rid of it tomorrow, is a very important aspect of establishing the amount of money you'll lend against a particular work of art. As regards scalability, I think it's true in every industry, the prototype is what costs the money. Once you've proved the prototype, then actually things really are quite scalable. Bearing in mind, of course, that the art world is still a tiny world compared to most economies. Yeah. I mean, our particular sector, in the art financing sector, is maybe $40 billion. Any government borrows that any given day of the week. In fact, large corporations borrow that any given day of the week. It's a fascinating microcosm.
It is. Absolutely. And the gallery business, Gilles, you hear the gallery business is in trouble. A lot of smaller galleries, mom and pop galleries, even though they have great taste and had success in the past. But you have a whole network, and you've grown it in several ways, both with partnerships and also with your 17 galleries and your international diversification, going to Houston, for example. So talk about the scale for you and what kind of the ideal size is.
Okay, so since 30 years, I met thousands and thousands of collectors. And I can, there is few type of collectors. You have the collectors, you know, who are buying, the real collectors who buy with emotion. You have the collectors who are buying and who are working, you know, a little bit like investors, you know, so they are buying mostly masterpieces, you know, they keep it in the time. So the first option about the collectors with emotion, you know, we can give this to our target through the galleries. About the investors, you know, we gave this security of the investors for the return, because at the end of the day, everybody, you know, who invest in art, they want to make money, and they want to be sure that the asset they bought is a good one. So we gave credibility to the investors and numbers to investors with the fund. And the new company I opened, so the Iconic Art, we act completely like traders. We don't act, you know, as gallery owner. You know, sometimes as a gallery, I can keep a painting for 2 years, 3 years, 5 years, sometimes 15 years. It could happen, you know, and we don't sell it because we prefer to make sometimes higher margin. And Iconic, we act really, you know, like traders, you know, so we act, we buy and we sell very, very fast. And we have an organization, you know, with a vertical organization, you know, with all the services, you know, about the logistic, about the archive, about the authentication, you know, of the work, like many galleries.
Yeah. And Phil, have you, by any chance, had a chance to visit any of the movie theaters here in
incredible.
I mean, describe for us, because I had that honor myself.
I mean, it's really how the cinema-going experience should be in 2025 versus what we experience in the UK and the US, which is, you know, very sort of run down and not very invested in, you know, kind of properties. But and it's what it is. It's not just about going and watching something. It's about the whole, you know, food and drink, beverage experience. It's about, you know, the setting that you know, are waiting to go into the actual, you know, theater to watch it within. And I think, you know, again, one of the great metrics that you're seeing is just that there's this huge appetite for cinema going that is on the, you know, on a hockey stick trajectory, you know, across the whole of the Middle East and across Asia as well at the moment.
Just very briefly, describe what it's like to walk into a Vox theater or one of these.
It's beautiful. It's like going into a hotel almost. It is, you know, it's an amazing experience beginning to end. And it's something whether you're going with your partner or whether you're going with your family. Like it caters for everyone. It really is fantastic.
It's almost a reinvention of the whole movie experience here, isn't it?
Yeah, and that's what we need to be thinking about as filmmakers, as creators. We can be as smart with our financing or using AI tools or whatever new tech is coming through. But if we're not thinking about the experience and our audience and our user at the end of the day, then like all of these things are for nothing in my eyes.
Well, thank you so much, guys. It's the end of our happy hour. It was wonderful. I learned a tremendous amount today. And so I feel very enriched. And thanks to you, I think the audience was too. Thanks, guys.
Thank you.
Ah.